Hey guys, and welcome back to my channel. For those of you that are new here, my name is Anita and I'm a real estate investor in the UK. And today we are going to be talking about one of the most hotly talked about topics for the last 2 weeks here in the UK, which is the mini budget. So let's dive right in. Let's start with what the mini budget actually is. So on 23rd of September, 2 weeks ago, our current Chancellor released the so-called mini budget, which is essentially a 45 billion debt finance tax cutting package. So I'm going to break down the key parts of this mini budget. The first being income tax. So income taxes were cut from 20% to 19%. This was for the basic tax rate, which is between £12,500 to £50,200. Creating a saving on average of around 170 per year per person within that tax bracket. In addition to the cut to the basic tax rate, higher rate income tax for those earning above 150,000 a year was also cut from the previous 45% to 40%. And this is predicted to give an average saving of around £10,000 a year for those that were in the higher income tax bracket. So as you can see, quite a lot of savings there. And these effects for the income tax are due to come into effect in April 2023 next year. Agenda on the budget was the national insurance rate. So earlier this year in April, we saw a rise of 1.25% in our national insurance rate. However, this has now been scrapped, and from 6th of November this year, the rates are going back to the way they were before, reversing the 1.25% rise. So the rates will be as they were before, which is 12% for those earning in the basic tax paying rate, so the 12,500 to the 50,200, and 2% on anything above that. And this is meant to be saving around £330 per person per year. Next, we have the stamp duty cut, which have come into immediate effect, so no waiting around for those. So here we have seen the threshold before which you have to pay stamp duty rise from 125,000 to 250,000 for your average home, been raised from 125,000 to 250,000, so effectively doubled. And this is expected to save buyers up to £2,500. And for first-time buyers, it's even better news, where it's been increased from £300,000 to £425,000, before which they need to pay stamp duty, so huge savings there as well. And based on current figures, about 200,000 buyers are now expected to not pay any stamp duty. Next, we have the corporation tax, where from April 2023, the corporation tax was due to rise to 25% from the current 19% for those companies with profits exceeding $250,000 a year. However, this has now been cancelled, and the previous corporation tax rate of 19% is going to be the only rate. Also in the mini budget was the investment allowance. So the annual investment allowance, which is the amount of money companies can invest in the UK tax-free, was meant to drop to 200,000 next year. However, it's now being kept at 1 million. In addition to that, the government is also currently in talks with around 38 different local areas to create a so-called investment zone where tax cuts, no business rates, flexible planning, and no stamp duty will apply. This is with the intention of speeding up development of land for housing and commercial purposes. Finally, what was also addressed in the mini budget were bankers' bonuses. So previously there was a cap on how much bonuses bankers could get, and this was capped at 100% of their fixed annual base salary. However, this has now been scrapped. This has been done with the intention to attract more global banks to hire and bring in more jobs, and to pay more taxes, and to invest more in the UK economy. So now that we have briefly looked at the mini budget, let's talk about why it was actually introduced. So the mini budget was created with the intention to create growth in the UK economy. Our Chancellor has set a growth target of 2.5%, which is very ambitious given that since 1997 the historic growth rate in the UK has been around 1.9%. So the mini budget was done with the intention of creating growth in the UK economy after the last 2 consecutive quarters saw the GDP fall, creating fears of an impending recession. So what has actually been the immediate impact of the mini budget? While the mini budget may have sounded like the perfect solution to get the economy going again, what we have seen since its announcement 2 weeks ago has been first a drop in the value of the pound. So the pound has fallen to one of its lowest levels since 1971, being equivalent to 1.03 against the US dollar as of Monday last week following the mini budget's announcement. And to give you guys some context, it was around 1.12 against the US dollar the day the budget budget was announced. However, following the mini budget, it dropped to 1.03, and as of last Friday, it was almost back to 1.12. The second biggest impact has been on mortgages. So the week following the announcement of the mini budget, we saw around 40% of the existing mortgage products on the market being taken off, and according to Money Facts, that's around 1,600 mortgages less than they were before. This was primarily due to market instability and the inability of lenders to actually properly price mortgages, as well as them wanting to stop a sudden rise in the number of people rushing to get their mortgage rates fixed and creating a surge in demand. Next, we saw a huge sell-off in government bonds following the mini budget, indicating a lack of confidence in investors in the UK government. This caused the price of 10-year yield gilts to rise from 3.5% to 4.3% the very Friday of the announcement. Yields in this case can be defined as the amount of money an investor receives for owning the debt. It's essentially the cost of borrowing to the issuer, which in this case is the UK government. So when the price of a bond goes down, the yields tend to rise. And the rise in cost basically indicates a lack of willingness of investors to own the debt. So they would prefer for the debt to be priced lower, which would mean that the yields will be higher. And following this, we then saw a £65 billion buying back program put in place by the Bank of England. The Bank of England essentially triggered this emergency bond buyback of 65 billion on Wednesday following the havoc created in the markets by the mini budget. This was essentially to ease the pressures mounting on pension funds and insurance companies, which manage trillions of pounds of people's money. And the final point we're going to talk about with regards to the impact of the mini budget is the FTSE 100, which saw a close to 2% decrease in its value after the announcement of the mini budget. For those unfamiliar, the FTSE 100 represents the 100 largest companies in the London Stock Exchange by market cap and accounts for almost 78% of the market capitalization of the London Stock Exchange. It's basically considered a good indicator of the health of the UK economy and the global economy because it has both domestic companies and international companies within it. And also its value tends to change based on economic factors and political factors, giving a good indicator of how investors are feeling and whether or not you should be buying or selling, and also what you should be investing in or not investing in. So what does this all mean? So what is the long-term outcome following this mini budget? First off, we know that mortgage rates are rising as the Bank of England has been forced to raise its base rate recently and is only predicted to raise it by 3.5% in November. So that essentially means that the cost of living is only going to go up for individuals, where they're going to be spending more in their mortgage products and be able to save less and less, stretching household budgets even further. And sadly, the Bank of England is only predicted to keep raising interest rates up to 5% or even 6% by some experts. So the outlook with regards to the cost of living does not look too great at the moment, despite the tax cuts. It has been predicted by Vanguard that in the short term, the mini budget will allow some short-term growth in the UK economy. However, this is going to be very short-lived and won't be long. Vanguard still predicts a recession is due in 2023. However, they predict a shorter duration than they did previously. So instead of the predicted 3 quarters of negative growth in the UK economy, they predict that the negative growth is going to start this month at some point and last for only 2 quarters instead of 3. And what about inflation predictions? So inflation was previously at 10.1%, but thanks to the energy price cap guarantee by the UK government, it is now at 9.9%, so slightly less. And it's predicted to be less than 4% by the end of next year, 2023. In theory, the mini budget could impact this because in the short term, consumer spending and business spending might increase. And because supplies have not changed, it's likely that this will contribute to rising inflation in theory. However, this is unlikely to happen because the Bank of England is predicted to only raise their base interest rates, and this will likely curb inflation from rising further. And what about the impact of the mini budget on interest rates? So the Bank of England has already raised its base rate from 1.25% to 2.25% it currently is at, and on the 3rd of November, and they have stated that they won't hesitate to raise the base rates to as high as needed in order to curb inflation and bring bring it back down to 2%, with some experts even predicting rate rises of 5 to 6%. Committee. The Bank of England's Monetary Policy Committee is meant to be meeting on the 3rd of November next month, and at that point in time it's predicted that rates will only keep rising and will be set at 3.5%. And finally, because of the mini budgets, spending cuts can now be expected in order to fill the 45 billion hole created by the new debt. It's still unsure what will be cut exactly. However, this could range from funding for local authorities, decrease in public investments, decrease in investments in infrastructure, and also potentially decrease in state benefits, amongst other spending cuts. So that's all for my video today, guys, on the mini budget, summarizing it. I hope the information I shared was useful and gives you some context of what's happening currently in the UK economy and what impact the mini budget has had. It's still early days, it's still only 2 weeks, so we're gonna have to wait a while to see what the repercussions are from this budget. So I will definitely be following the news closely, reading up on it, doing my research, and will share with you as soon as I know more. As always, thank you so much for watching, guys, and I will see you in my next video.